YouTube chat running, and then we'll get Zoom up. Let me share the screen here. Hopefully we can do both. No problem. All right. Good morning. Good morning. Good morning. No echo. That's good. What's happening, Billy? What's happening, Mark, Sean, Chuck, Stacy, Aggie, Jeff? Good morning. Expected move. There we go, Tom. Nice. What's happening, Greg? Hey, Ernesto. Hey, Lester. Dan in the house. Wade's here. Keith's here. Chat's open for everybody. Very good. What's up, Paul? Hey, Louie. Nice, nice, nice. All right, Greg, expect to move. Okay. I will spend some time in the back office today getting some of those expect to move links out to everyone. So I appreciate you taking a look at that. If you joined me yesterday for my little closing hour, final hour session, so I built an indicator yesterday that I think would be really useful for me. If it's really useful for you, then you can have it for $20. I built an expected move, and today I already punched in the numbers 66.76. So when we have opening bell and we'll have a new print, we're going to have maybe a tiny little gap here, 0.05, 0.06%. So again, I can manually do this stuff and we can kind of get it, but this is going to be a gap adjusted box from opening bell to closing bell that will give me, if we gap up, this is how I've talked about this a lot in daily profit play. If we gap up, I take the gap up plus the expected move. If we gap down, I take the gap down plus the expected move, right? And so that usually about 80 plus percent of the time, 85% of the time, even 90 plus percent of the time, depends on our deltas, obviously, with our trade. But if we are focused on our, selling premium, looking for income opportunities, these are pretty safe levels to trade. Very safe levels to trade, in fact. So that's what I'm looking for this morning at opening bells, to see this indicator kick in and give me the opening bell marker at 9:30, and then look to see if it's gap adjusted. And it will be set to a 66.76, which is currently my pre-market SPX. Now, I will take a look at, let's go Thinkorswim. Thinkorswim. And let me find the pre-market Thinkorswim as well. Actually, let me go back here. Try that again. Okay. Join this morning. Good. Admin, if you want the indicator, you can send me an email. David, expect the move. Yeah, if anybody's putting in expect the move, then do this. Send me an email. Chris Pulver pub at gmail.com. Yep. Send me an email. Thanks, Pete. You got it. Chris Pulver pub at gmail.com. No, I know. We should be good. What the F? That's weird. All right, give me 1 second. I'm trying to give me a Thinkorswim plus or minus. Who's got Thinkorswim up? $55.75. Okay, so it's higher on Tasty. Interesting. Okay, so I'm looking at it right now. SPX, I finally got it up. So SPX option chain today, plus or minus 55.65. Tasty showing 66.76. I'm going to go on the higher of the two. I think that's a pretty safe way to trade this. That way, if we're calling, a top or bottom safely, we do it with the higher of the two expected moves. I don't know which is right. I don't know which is wrong. I don't know why there's a difference between the two. They were built by the same freaking teams. 13 years ago, Thinkorswim was built by Tom Sosnoff and his team, Scott Sheridan. Why are they different? I don't know. But I'll take the higher of the two, so that way our levels are safer as far as probabilities. Cool. All right, so 66.76. I've got it right here in the expected move box. Let's see what prints here at 9:30. We'll get a gap adjusted move. Futures now down about 0.2%. I do have an interesting little dilemma. I've got alpha arrows up on futures and alpha arrows up on SPX. One is calling for a short, one is calling for a long. So that's kind of giving me a bit of a head fake. We'll look to see if the market's going to fade back down. Here's just what I'm looking at technically. Trump had a nice little save on Monday afternoon. The market was already up off of the 200-day moving average anyway. So market was up off the 200-day moving average. Markets pushed towards the highs of the day, but we are coming right back into I think what was support for a lot of weeks and a lot of months. We came right back to it. Now today is going to be kind of a tell to see like, well, if the bears want to resume control, if the VIX is going to go from a 35, which is retreated to 25, does the VIX go back up to 30? Does the VIX retreat to 20? If price goes up into the, let's say, 6850, 6900 handle, we are no better or worse than where we started this entire trading year. If the market rolls over, I could still see this being a soft kind of underbelly for the market where we hit some resistance, work our way down, maybe retest that low from Monday. And, that's just what we expected to see with a bearish breakout, maybe testing 6550 to 6500, right? So, what does that make me do for today? Well, honestly, um, I think that with the gamma levels up here to the upside, CPI comes in as expected. We didn't have any surprises in CPI data this morning. Here's the 8:30 news. So we have zero point 0.2 for month over month came in as forecast. Revisions, nothing. Year over year CPI, this is core CPI. Year over year previous was 2.5, forecasted 2.5, came in 2.5. Year over year for the headline CPI, previous 2.4, forecasted 2.4, came in 2.4. I just got off a live session. I said, this is probably like the mandatory CPI print because they just wanted to get a number out there. So they're like, let's just put it exactly as expected. That way the market's not surprised. And that way we're not thinking like, oh, oil prices went up to, $120 a barrel. That's gotta be an inflation shock. Not yet. And if anything, the CPI data is going to be really fudgy when it comes to, when we're in April trading March's CPI numbers. Maybe that's where it pops up and actually shows like, oh my gosh, inflation is, spiking for that particular month. But as it could be, it's like it could be short lived because oil is retreated, 20, 30% from those recent highs. We also might have just put in a yearly top for oil, by the way. I'm not saying that. I just think like that was such a crazy move with a crazy upside over, basically a 1 week period, 1 to 2 weeks just squeezing, right? And then just look at how quickly that faded. I was short on Aussie CAD, made like 230 pips, and the thing's right back to where I started. I'm glad I closed it. I had a nice little gain, made a couple $1,000, and it's right back up to the point that I entered again. So it was such a aggressive trade that I'm just gonna wait and see if there's something better. So, long story short, CPI numbers came in kind of, as expected. No surprises there. Now, what does that let me set up for the day? Well, as usual, okay. I don't think the market's going to have really much to get super excited about today. Obviously, I could be wrong with some type of White House commentary about like everything's great, the war is over, right? Maybe. But I think mechanically today, I'm just going to look to sell some bear call spreads. Again, you can see a pretty wide transition zone between we're opening up here in negative gamma. So if we have a slight gap lower and we have negative gamma to the downside, if the VIX goes up, let's say 25 turns to 26 or 27, again, VIX box wise, we could have a much bigger move. We have lows all the way down to 60. What was that? 66. What was that low? 66.36. Wow. And that was lower than the 67.10 that happened twice. We had a 67.11, 67.10. Now we have 66.30 and change. So I just look at it's harder for the market to grind all day to the upside. It could, but as long as I'm selling premium up here, I think that's a good spot to be, safely selling calls. The downside, if we start in negative gamma, so below this red dot would be negative gamma, above the red dot's positive gamma, and we slide lower. Again, this is an inefficiency for Monday. If the market's going to come back and chew into that, I'd rather be bear call spreads and try to get some profit if price is going to fall. Now, I don't know what's going to happen. Obviously, I know what's going to happen, but just educated guess, it is harder for the market to blow us out to the upside than it is for the market to get a little bit more excited to the downside and surpass, right? And with a plus minus day around 66, 67 points, I'm hoping that gives us a decent amount of premium to jump in and sell some calls. If we look at 60, I'm able to sell something probably around like 68.45, 68.50. I don't think that's bad. I might do like a couple 10 wide stacked bear call spreads and see what that gets me credit wise. It could be a pretty easy, couple $100 today, and then not really have anything to worry about the downside unless I wanted to try to catch something down here and stay out of the way, but get something like maybe a profit trap down here. Okay. Pete says is expected to show up next month. Yeah, the inflation stuff, right? Yeah. What's this? He's going to talk today in Ohio and Pennsylvania. May move things. Who's he? You have one guy talking in the same place in two different states. Trump's talking in Ohio and Pennsylvania same day. Is he on the calendar today? Is he doing it during market hours? Is he just on a calm the fears and calm the nerves media circuit? Trump speak is so again 4:25 p.m. Eastern time. This is what it was. It showed this crap on Monday where it's supposed to be 5:30 p.m. and he spoke at like 3 in the afternoon. So again, I'm not going to base my day around Donald Trump. But I would say if we have profits going into the final hour of the day, maybe take some profit, not get surprised like we did on Monday. All right, so it's 9:16. Yeah, so it's on the calendar at 4:25. Let's see what it shows here. Economy, prescription drugs, pharma in Kentucky. So we have Ohio, Pennsylvania, and Kentucky, 3 places at once. I don't know. He's cloned. Our president's a clone. All right. Let's see. Hey, Richard, how are you, man? Look forward to retiring, working individuals, promoting. Good. Yeah, let us know how we can help. We are here to help for sure. Yeah, Biden clones. Yeah. I think that was just puppets. Biden just had puppets. Anyway, all right. So, like I said, I'm not going to revolve my day around a 425 announcement. Maybe Trump has some headlines early, but again, if we, do our job, expect the move should be, selling some premium up in here. And again, I can play some defense, but I'll base it on the expected move. Maybe if we have expected move at 66, 76, if I can go 70, 75 points higher, kind of start in that realm. Let's see what the deltas look like. We're going to have futures. I mean, it's fairly close to the previous day's close, 0.1% down. So a minor gap. So I'll see what the expected move shows for a gap adjustment. But we're probably looking, let me get a measurement here. So we're going to go slightly lower. I mean, we're probably going to have like the 68.40, 68.45 handle as far as where the expected move box will be, and then to the downside. So I'm going to look to see if I can, I don't know. My plan today, this is what I'm thinking is because it's a larger transition zone to the downside and this Monday inefficiency might be retested by price action. I'm going to try to just sell and defend the tops for right now. I could always do like a simple, 10 delta, 5 delta, $5 wide, tight iron condor type trade and accept it is what it is. Let the markets be the markets. Wednesdays are typically very efficient days, which we know. But that's, I don't know. I mean, it's again, there's always like a few different ways we can tackle the mornings. Okay. So we'll see. Premium looks pretty low. Yeah, we'll see. So I mean, certainly there's more put premium than calls. There's been a lot of skew in the market the last 4, 5, 6 weeks because of those tendencies for the market to have like a flush day or the VIX to be up in the 20s. So the put premium is certainly better than the call premium, but across the board is still pretty good. If you are owning shares of anything, you're selling calls, you're getting good premiums for it. If you're selling, naked puts, ratio spreads, anything out of the money, you're getting pretty good premiums for it. I took a bonus trade yesterday. If you saw that with my afternoon session, perhaps you did. I did this bonus trade here. I'm using the VIX, which was 25. I went out to a 45-day window. I really just used kind of the Tasty Trade 101. They like to do strangles. I like to do iron condors. I like it to be defined risk. But I'm going out to like a 15, 14 delta. This is a bear call spread, 71.75 by 7,200, and a bull put spread, 61.75 by 61.50. Pulled in almost $7 of credit. So there's my risk reward profile right there. If I can turn this $700 into, let's say, $300, $350, I'm probably taking the profit. I'll also assess this trade at the halfway mark. So we're at 45 days when I took it yesterday. Let's go down to like 2021, see what the trade is at, whether it's profitable or not. It should be, I mean, I'm guessing if we have, sideways VIX or up or down VIX or lower VIX, if we have a lower VIX than 25, we should be looking really good for profit on that trade. And so I also did the equivalent. If you don't want to risk 1805, then you can do the same thing, risking 385 on XSP. So up for $1.15, risking 385. And again, if I can turn $1.15 into like maybe a 50-cent debit, 40-cent debit, 30-cent debit or less, I think that's a pretty good win. And then you know that price has to be inside these ranges. It's a big iron condor trade. Okay. All right. Gamma indicators. So a couple things. I get a lot of questions on this stuff every single day. So what you see on my chart right here, these are gamma indicators. I also have a live gamma feed. I also have dynamic trend. I get questions on this all the time. I'm an affiliate for both these. I subscribe to them personally. I pay for them, out of my own pocket, and I can save you. I think I could save you 10 to 15% on this Tanuki trade feed, which is live app here for screeners, matrix. I use it primarily for the zero DT flows, and then for dynamic trends, they built me an exclusive zero DT package that usually they charge, like at the enterprise level, they charge like $3,600 because I've subscribed to them for like 5 years, and they built me an exclusive zero DT that's like $945 a year. You have a full feed. You have an aggregate of 40 different broker platforms all over the world that build this aggregate feed of where these real-time gamma levels come in. So I have a pre-market and I have live. So when the market goes live at 9:30, I toggle this to live, and all of a sudden we can see this all adjusted in real time. But pre-market, this is pretty important to note. We're negative gamma below 6,800. So to me, the pressure today is pushing, to the downside, maybe chewing into this inefficiency for Monday. If anybody has questions on this stuff, you can send me an email, chrispulverpub@gmail.com. I have an affiliate link for each one if you want. I can save you some money on them if you want to use it. I use this stuff every single day. Okay. Every day. So it has been instrumental to my trading. It gives me a visual roadmap. It gives me, the ability to make pretty good real-time decisions and position accordingly. So I would not trade zero DT if I didn't have stuff like this. So the gamma levels help a ton. The expected move thing that I built yesterday helps a ton because we do this math every single day. And now I can just do it with the exact plus minus that I have in my broker platform, and I can do this on any time frame. If I want to go and see, well, I'm going to take the daily profit play trade, but I'm going to put it over a 30-day window. I want to do this on a stock. I want to do this on gold. I want to do this on silver. You can do this expected move on any asset you want on any time frame and duration. So I have like an 18-minute video that I walk you through this. If you're interested, you just have to send me an email, and I'll give you the info on that. So cool stuff. Okay, so it can be used for stocks. Yes. So this stuff can be used for stocks. Absolutely. You can put in any feed you want. This can be used for stocks. I have feeds on SPX, XSP, NDX. I've got any stock you want. We can go Apple. Okay, gamma levels there, pre-market and live. You can go NVIDIA. I mean, anything. It's everything you want to trade. The only thing I don't have in dynamic trend is a futures feed, and I also think I think that they're working on futures for Tanuki trade. They don't have it yet, but that'd be the only other thing I'd be missing was maybe a futures feed. But I pretty much scalp futures anyway. Speaking of, we're coming back up in ES right now. I think we're back to flat. So let's see what the day gives us. Okay, negative gamma below 6,800. Does the market? I mean, it's kind of stuck right in between. Do we, have a decent call wall to look at? Are we going to pull back into this inefficiency? I don't want to be short or long. I want to just take a good trade. So my goal is, let's see if we can have the markets be within the expected move today, and we can make some bucks, right? So define risk is what I'm going after. See if Wednesday is an efficient day, and if we stay within that plus minus, we should be good. So let's see what happens here in about 6 minutes. Tom, send me an email, chrispulverpub@gmail.com. Tanuki, I think I can save you like 10 or 15%. That's like $450 for the year, $460 for the year. And then dynamic trend is an exclusive zero DT that's $945 for the year through me versus like $3,600. I use both. I'm not going to say one is better than the other. I like them both. I use them both. I've subscribed to them for years now. I like them both. I think that, what I like about Tanuki Trade is having the live app in addition to the TradingView plugin. That certainly helps me visually. And then I can also run some option screeners here if I want to look for a certain skew. I want to look for what is showing good gamma squeezes to the upside or downside. You can do some quick filtering. I think that's pretty cool to take. They have 200 symbols in Tanuki Trade, and then Dynamic Trend has the entire stock market. So you can do probably over 1,000 instruments in Dynamic Trend, but you can do a very quick filter here and get what is like short term, medium term, and long term gamma positive, and looking to see if that's a direction we can trade. Also, one thing that's really nice is if you want to use skew in the market, so you can go IB skew, so you can collect more premium on puts, more premium on selling calls. You kind of know the rhythm of the market, whether or not you should be selling puts and doing maybe fancy strategies like a ratio spread or a jade lizard, or just if you have any shares of something like buying and selling calls. Like a buy right strategy works very well for something that has like high call skew, right? So anyway, there's a lot of ways to tackle it. I just think there's a practical use for it. And if you are a option trader, I think these are tools that are very important for decision making. Is the range of the day based on the closing? It's both. It's a great question, Stephanie. So I built this the expected move box. I have box one, which is going to be based on the previous close, and then box two is what I personally want. And I did a gap adjusted box. To me, that is the safer way to trade the expected move, because we have seen this many, many times. If you have the expected move based on the close and the market gaps down, it could go that plus minus from the opening bell price. And so if you base your expected move on the close yesterday, well, it's already off because you have the market down 30, 40 points. So for me, the gap adjusted means I'll take the gap, then the expected move, and I'll take the previous day's close in the expected move. That gives me a wider box to work with, and that typically keeps prices contained in our levels. Obviously, the deltas will shift a little bit. It'll be lower delta call because of that, the way I measure this, but it's a much safer play. It's a much safer play for those day-to-day expected moves. Yep. So I have it. You can do both. And also, people asked this yesterday. It is also available on Thinkorswim. I built that yesterday. So yeah, I have the expected move box right here on Thinkorswim. You can shade in box one, box two, has the labels and everything, and looks pretty clean. I've got the grid, so I don't want you to have to like save your own workspace or save over stuff you have in Thinkorswim. You can just have your own grid, pop it up on a separate workspace for that expected move box. So again, if you want that information, just send me an email, chrispulverpub@gmail.com. And like I said, that expected move box is $20. Cool. All right. What are you doing, boy? Get off me. Okay. 2 minutes for the open. Let's see what we have on the day. Expected move still 66 and change higher on Tasty than Thinkorswim. It is Wednesday. CPI move is kind of a dud. Trump's on the calendar, but after closing bell, hopefully that is true and not something like we got surprised with Monday. Positive gamma back above 68. Call walls around 68.50 to 55. If I'd sold some calls up here, I probably want to play some defense around the 65 to 70 handle. And to the downside, I mean, if we're opening up around, let's say, I mean, it's going to be close. I mean, 67 should offer a pretty decent amount of support intraday, but because of the put premium, if it's possible to get a better put side down here, I'd obviously rather sell like the low, and that way the market would have to come in and take out the low, which I obviously don't want to see happen. We'd have to have like an outlier type move to do that. So I don't know. Let's see. I'll look at the numbers for an iron condor. I might just look at selling some bear call spreads today. As long as I can get like 150 to 200 bucks on the day, I will just do that, and then maybe play some defense if I need it. Does that replace your blue lines? What blue lines are, Randy? What blue lines? You talking about the daily profit play ones like this? Daily profit play is different. This is the ATR with the VIX box. So VIX box is showing the extremes. That's taking the real-time VIX divided by 16. This is kind of the extreme high and low. The expected move for me is like what the brokers are pricing in. You want to trade like a market maker, that's the expected move box. Yeah, so this is still fine. The daily profit play indicator is still fine. It's still, standard for daily profit play. But I'm just excited about this because, we do this stuff manually. We do it manually every single day, right? So, all right, let's see. Opening bell marker should pop up here in red, and then we'll see what the box prints. There it is. All right. So my value is up to 60. So I've got box two, which is my 68.59, because we gapped higher. Holy crap, we just gapped higher. Okay, so my value is 68.59 and 67.14. let me go back to SPX here. Okay, so above this high, value at 68.59. I'm looking at that for my call side, SPX for the day. We're down to 45 already. All right. I know that my plus minus was 66. I need to be looking to sell like the 68.60 or something like that. See what that looks like on my call strikes. So 68.60 is a 5 delta. That's really, really low. But again, if I stack up and I can get some premium here, I'm going to get $1.50 for that bear call spread. Let me try to get this. So I'm going to go 2 bear call spreads, 10 wide each. That might be a quick. I'm going to try to get $1.50 on this for 10 wide. Let's get me $1 something. So highs around 35, 60 should be safe. Come on, don't deplete my premium already. 55. Okay, so that's 55. Let me maybe try this. I'm going to go to my numbers here. I'm going to go 60, 60, 75. All right, I'm taking on a decent amount of risk here, but I'll play some defense. Let me see if I can get $1.70, 80. So I'm going bear call spread, 68, 60, and 75, 68, 65, and 80. Now we're getting some movement here. Let's go $2 on this. Can I get $2? $1.95. This should fill. $1.95. All right, it's got filled at $1.95. All right, daily profit play, 2 bear call spreads. SPX. Today is the 11th. $6.875, $6.880. Oops, that's a 60 and 75. Sorry. So 68.60, 68.75, 68.65, and 68.80. $1.95 credit. Okay, it's 2 bear call spreads. That's what I'm starting out with. So keep an eye on this for the morning. If I want to do just a standard daily profit play, we had a slight gap up. So gap adjusted is 68.59 and 67.14. So if I wanted to sell some puts, again, I mean, are we going to fall today? It's above 6,800 is positive gamma. This is the one thing I'm watching for right now. It's like I'm not jumping into the put side yet, just because if I'm going to put a put here, I'd rather put the put lower. And again, this might not be a big mover today at all, right? We'll find out. But I'm hopefully going to see, no damage up here towards the 65 and 70 handle. So we're at 60 and 65. And the price just kind of stays in this zone. We'll see where we go. If we're in negative gamma, stay in negative gamma, then there's a lot of room to maybe get to 6,700. If we get above 68 to 68.50 could be a drift all day, but to be determined. Okay. I might do another version of this. Let me see if I can get this version. Okay. There it is. So the box just popped up. I was wondering how long it'd take. It took a few minutes to get the box to pop up, but that's also my timestamp. So the 5-minute time frame, that's perfect. I was wondering if I needed like a real time update, but because of the 5-minute chart, I now have the 5-minute box. So if I went to the 1-minute time frame, it'll print my box immediately. So we get that first 1-minute candle at the open, you'll get your expect to move box. So I'm pretty happy with that. All right. Yep. So again, if you want the expected move box, just send me an email, chrispulverpub@gmail.com. And then, like I said, like I'm doing all the stuff myself. So I mean, back office manually, like I'll give permission. It's a $20 indicator. I'll build it. I'll give you permission if you want Thinkorswim or you want TradingView. I just need your TradingView ID. If you want Thinkorswim, I'll share the grid. So anyway, have some fun with it. But I mean, that's what's nice is like the work is done and gap adjusted. You know, I want to make sure like the math is right. I plugged in 66.76 and we take the gap right here. This is where the market opened. We go up and there's your 66.76 box right there. Okay. So that is gap adjusted, expect to move. We shouldn't see prices above 68.58, 68.59 today. So our sell strike is 68.65. So obviously I'm hoping that the markets maintain an efficient day. Okay. All right. So my trade this morning is just a bear call spread for right now. What I'm going to look to do is maybe put on some defense. I want to spend some time talking about this. I had somebody email me yesterday. Leslie emailed me yesterday asking about, how do I play some of these defense trades? And I know for daily profit, we talked about this from the the master classes in daily profit with playing defense on the broke wing butterflies, right? All right. Sorry, I'm getting some comments here on YouTube. Daniel's here, Royal's here, Paul's here. Good morning. Good morning. Could you build that for Ninja Trader? I can try. I personally don't use Ninja Trader, so I'd have to download the platform and see if I can get it to pop up there. I see if I can code it for Ninja Trader. But like I said, it's easy for me to build almost everything in TradingView, Thinkorswim. Those are really popular trading platforms. I know Ninja Trader has like Ninja Trader fans, and they love it. I just haven't used it. Let's see here. I ran stuff. I'm live. Yep. Okay. So we're caught up on comments. All right. My point was I was going to get into some defense stuff. So right now, let's go back to this chart. Right now, I know that I have my strikes start at 65. Right. So I started at 60 and 65 for the day. So that green line is where I need to see price stay below. And I don't have anything to the downside yet. Not yet. So let me get these updated here for a moment inside of my platform. SPX. So I'm going DPP, bear call combo, pulled in $1.95. It's already up 30 bucks. If I can pull this thing down to like 95 debit, 75 debit, 50 debit, I'll probably take the profit. I wouldn't mind grabbing this one. Let me close this down at $1. Let's go 45 cents. I'll make $1.50 on the day. That should get me out pretty decent timeline wise. But now I want to talk about some potential defense. Okay. So I've got $1.90. This is how I always think about my defense. So I have $1.95 to play with. Okay. If I play defense on the day, I will basically let the daily profit play run for the day. Okay. Can you still get in the trade? Right now it's trading for $1.65, $1.70. You can take the same trade I take, but you're going to get a little bit less credit up front. You can obviously let it sit. Like if price goes up, if we go up in price, if price goes higher, then you will see the premium increase. So you can still put a pending order to $1.95 and try to get filled. Just understand the risk. I mean, I'm risking, $2,800. So my defense has to play within that wheelhouse. I probably want to say defense that can get me $2,500 or $3,000 in defense just in case I'm wrong without taking a lot of excessive risk. So my defense trades are never about big risk. It's not stacking on more risk. I already stack enough risk on with daily profit play. But my defense trade is going to be something that helps me defend. So if price is up in this area here, right? If price is here, I need to defend that. And that's just to help keep me in the trade. So there's a couple ways I can do it. The broke wing butterfly is always a good one, but that is tough to fill on the call side. It's easier to fill on the put side when prices are falling. We can get filled on the VIX is going up and it increases premiums really quickly intraday. But on the call side, like that slow grind, you you tend to not get enough premium to give me like the dollar credit risk for to make one plus $1,000 profit trap like I like. That's not going to be working here. So what I could do is if I sell the 68.70, this is a trade I can look at for defense. If I sell the 68.70 and I go, let's go 30 wide here. Now, I don't know if I'm going to take this trade because it might cost me a bit more than I want. But right now, that that's 30 wide. I can pay, $3 for that trade. Well, that's going to take my entire daily profit play away, right? So what I can do instead is let's say that we're threatening the 60 and 65. So if I start a broken wing here at 60 and go to 80, that's 20 wide. That's $2,000 worth of a profit trap there. And let's see if I went 60 to 80. And that would be, how wide can I go here? So that's 20 wide and then go 25 wide. Really? That's going to cost me $6 to take that trade? All right, let me try something different. If I went 55, let's go 50 to 75. Let's go 50 to 70. And that's 20 wide, and then we'll go 25. Let's try this. So this would be a broken wing butterfly structure. There we go. So I could play with this, right? I can get up to $2,000 for a profit trap. This plays some defense. Now, again, like I don't necessarily need this trade as long as price is efficient. So I try not to spend an arm and a leg on this defense. Now, if I take this type of defense, meaning I would have the trade was set up this way. So price is down here in yellow, price is down here in yellow. So this is real price. We're trading at 67.89, and I need price to stay below 68.60 for me to make money. So if I add a trade like this, right now the broker says you can take that trade, defend yourself up to about $1,900 of profit, okay, for 80 cents. So I can risk 80 cents. I guess I'm risking 80 cents as a throwaway defense trade. If I'm dead wrong and price is above 68.95, which I would find that to be extremely difficult, there's like a 2% chance of that happening. I do have some more risk on the trade, but I'd be risking 585 in order to, make up the 1,900 bucks. So the defense is hopefully going to help me offset, this area for my trade. It's not super expensive. So what I might consider doing is right now nothing because if price is going to fall a little bit, we might see some quick profit on our bear call spreads. But if it looks like my position is going to be threatened, then I may opt to do something like this, where I can spend like 20 to 30 cents, get a profit trap, offset some of my risk that I have, like right here, like for 25 cents on the day. This isn't a bad trade. I get a $1,500 profit trap here. Okay, let me see if I can get this filled for like 25 to 30 cents. That way, my $1.95, I can still walk away with the $1.70, $1.75, $1.60 on the day, and that way it's kind of a free. In a sense, it's not free. It's not free. There's still risk in the trade, but the probability of this thing paying me is, this trade itself has an 8% chance of profit, which means that's why the asymmetry is there. I don't think I'm gonna get blown out to the upside. So if I take this trade for 25, I want to take it for like 10 cents, to be honest. Right? But if I take it for like 20 to 25 cents, then I sacrifice that 20 to 25 cents from here, but I can still let these bear call spreads go towards the end of the day and end up making like $160, $170 on the day per contract. Okay. So to summarize, what I'm doing is this. Anytime that I'm placing a trade, let's go to this expected move box. Okay. Anytime that I'm placing a trade and I have my primary trade just slightly above this level or just slightly below this level, you have to remember that every time I place a trade like this, I'm looking at about an 85 to 90% chance of profit on these trades. So I don't want to spend lots and lots of money on defense because it's a low probability defense trade. But if it's needed, meaning if I can defend prices maybe testing these highs or higher, or prices going lower, then it helps offset some of my risk. And that's really what it's about. I might not win break even or better if I play defense. I might not. But if I have, $2,800 of risk today and I can wash away 2,500 of it, that's a big improvement for me, because for me to make 300 to 400 bucks is easy. But for me to lose $2,800, it's going to take me, maybe 10, 15 trades to make that back. So I'd like to make it back sooner if I can. So the defense side, what I prefer is, if I'm going to look at a defense trade, I typically do a trade where I have a profit trap in here. So I have like no risk to the downside. I have a profit trap and then some risk if it goes too high. I have no risk to the upside, a profit trap, and then some risk to the downside if we're blown out. So price has to do something very, very out of the ordinary for this trade to have any risk. So if I have excess risk, it's going to be small, and I have defense to help offset what I'm taking on for my kind of standard daily profit play or my standard risk on the day. Does that make sense? And there's a few ways to craft these trades. I mean, yes, a broken wing butterfly for credit is great, but sometimes during the day, it doesn't offer that. Sometimes during the day, it trades for 5 cents debit, 10 cents debit. A lot of people will ask me, like, my defense trade, I put a pending order in at $1 credit, and you're like, my broker shows it's trading for 5 cents debit. I don't want to take the trade for 5 cents debit. Okay. But through the day, I will settle for a 5 cent debit because I know that it's still a hedge. It's still a cheap throwaway trade. If I'm wrong and I lose 5 cents, I don't really care. Right. But it's offering maybe $1,000 to $1,500 profit trap. And so for me to throw $5 at it, if I get any type of management in that profit trap, that can help offset some of the key risk I have in my standard daily profit play. Does that make sense? All right. So do I need to take the defense trade right now? Probably not. Not yet. Right now, it's still showing about 30 to 35 cents. I don't need to force the trade yet. Okay. I could also do a butterfly spread. Maybe this is a little bit different. If I went 70 by 90 by 50, this might be cheap enough. This is like 50 cents, 5 cents, 10. I mean, I don't know what's going to, the bid mid ask is kind of a little wild. So this offers a, $2,000 profit trap, but this one is all about the end of the day. Right now, it seems like price is cooperating into negative gamma. Let's see where we're at for our current position. I'm already up 80 bucks. I mean, if we can take a quick $100 today, it's like, I don't mind just grabbing the profit. So if I can get this down to like 95 cents or 90 cents, I might just take the profit if we're going to push a little bit lower. So we'll see. And again, there may not be a lot of direction. The thing I was looking at today is there's a big transition to the downside. If the market comes back into this inefficiency, I could see price falling a little bit lower. And again, I'm not ever assuming that the market's going to go one direction all day. Most of the time, the market's going to be choppy. It's going to be efficient. It's going to stay between an expected move, and we can capitalize on that. But if we are, below this closing bell yesterday, and we're pushing a little bit lower, I could see us testing this intraday low. I could see us maybe testing in this area, where Trump made his announcements on Monday. And if that's the case, our trade should be looking pretty good. But more importantly is, like, as long as price stays below 68.60, we're looking pretty good. Okay. Leslie, does that make sense? Bodine says Ninja Trader can be linked to TradingView, so you can use the TradingView and trade through the chart. Very good. That's cool. Daily profit play traded $1.20. I'm not filled yet. I would. I mean, you can keep it there. Let's look at another opportunity. So if I just go mechanically, I mean, prices are pretty much flat for the day, right? We opened. So this is our close yesterday. We're right here. So we're kind of flat on the day. Let me take a look at. Let's do the plus minus here. So we're pretty much from yesterday's close. We're even. Let's look at like the 60. And again, the plus minus now is 44. But let's look at like 60 points and see where we're at. Okay, because I could still take a trade. Let's go for the day. Let's go plus minus 60. I'll go plus minus 67. So 67.76 plus 67. So 68.45. It's going to round up a little bit. I'll see what we can get for premiums here. And then 67.76 or 7 minus 67 down to about 67.10. So if we're going to look at a standard daily profit play, maybe like the 45 by 55 or 50 by 55. I mean, if I can get $1 on this one, I might still take the trade. So 50 by 55, and then the 10. Let's try this is a 12 delta. So we've got a 9 delta 6850. We have a 12 delta 6700. I'm going to take this trade for, it's trading for 95 right now. Let's see if we can get this thing for $1. Let's try for $1. Let's try for $1. I'll try for 95. Since it's trading at 90 right now. Let's try 95. Come on. Where's price at? Price has fallen a little bit. I think we can get $1 out of that one. I'm going to try for $1. Okay, pending order coming in for daily profit play. Adding a 5Y DPP. 311. Okay, pending order. Trading for about 85 cents right now. If price falls a little bit, then it should get filled. Now I'm showing there's 88 cents, 90 cents. All right, price has fallen a little bit. If we push into this transition zone between gamma levels, we push down a little bit lower, that one might fill us at $1. 67 is way down here. So, I mean, again, it should be pretty safe. If it doesn't fill, it doesn't fill. But I'm going to take that trade to add to my bear call spreads. If I want to settle, let's trade. I mean, I've got the mid price at 85, 90, 85, 90, 85, 90. It's like, maybe, can I get 95? Can I get 90? And again, I don't like to take less than $1, but we're already 20 some minutes into the trade. So let's see how this looks. Let's go back to $1. I'm just going to go to $1. So pending order, same levels, going in for $1, trying to get it filled. Pending order. Let's see what the day gives us. So still like pretty quiet price action on the day. Put and call sentiment, only about a 10% separation. So pretty indecisive on the day so far. Below 6,800 is negative gamma. That's why I'm thinking, it's going to be hard to get above 68.50, 68.60 today if we're kind of starting the day off in negative gamma and the market's not moving. Okay, so we'll see what the day gives us. Any other news on the calendar today? Probably not a ton. So I got my box run 67.14. All right, and I've got the 6,700 on my 5 wide. So hopefully that's out of the way. Hopefully we're out of the way. And if, essentially if I have a trade that it's right up here for my call spread and it's down here for my put spread, if price stays within the expected move, we should be fine. Yeah, he's always excited about the trades. All right, so we'll just hang out. All right, daily profit play in. What else is going on for the day? Let's check and see if we have any earnings today to take a look at. Pinch point, I can price out a couple more. For the day, price action seems pretty chill. If we break, I mean, a couple levels. I mean, if we break above 6,800 to 6,850 is kind of open space. If we break below 67.75, it's open to 67.50, maybe back into this zone, which is around 67.20. That's if we go anywhere. Again, it could be a very classic example of implied volatility greater than realized volatility, or expected move is greater than the actual move. Those are good formulas for us to trade with every day. So any defense trades? Not yet. Not yet. No defense trades yet. If I'm going to go defense, I might go something way down here. I might go like wide open defense down here, and maybe pin like the 66. I mean, if my defense needs to be below 6,700, I could possibly do like a 6660 for, I don't know, maybe 30-40 wide. I'm curious if it's really cheap. It might be really cheap. If I can pin like the 50, let me see what 6650 looks like for a pin. 6650. If I went, I could technically overlap that strike. That'd be 40. That's 40 wide for a 4K profit. So 40 wide down to 15. Yeah, I mean, I want it to be cheaper. That's going to cost me $1, $20, $30. That's going to eat into my profit. I can obviously go shorter than that. So 60, 65, that's 30 wide. That's 30 wide. So for, 85 cents. Or I do a broken wing. So that'd be, this is a $1,500 profit trap. So it gives me basically a 30-point zone. So I go 6705, 6690. Okay, that's 15 wide. That would get my break even down to 6675. So if I do this, that's pretty cheap. Like, to me, that's a good free defense trade for like 5 or 10 cents. If I went a little bit wider here, I'd risk about 45 cents to make, maybe $2,000. But I don't think I need that type of defense on the put side, so I'm just going to do this. I think this for like 5 cents, 10 cents debit would be fine. Let me try a 10-cent debit on this defense. That's a $1,500 profit trap. I'm okay with throwing that away. 10 cents not filling yet. I'll let that sit at 10 cents. We might not need it. Still not filling at 15. I'm just going to keep it at 10 cents. Okay. So let's hang out for the day. Yep, it's all coming from me. So I saw your email. I saw your purchase. So I'll send you the email today. Yep, I got it. Oh, it's all manual. So I'm a one-man show here. So I'll get you the info today. But I appreciate it. Just give me a couple hours. Defense trade, sure. It's a put side. It's not filled yet. It's just a pending order. I'm posting a defense bottom trade. I might look at maybe throwing a defense top trade in, just watching prices. So defense bottom. $0.10 not filling. Let's see here. I mean, what I should do is start this off as like a 50-cent to $1 credit and see if that actually is filled. But sometimes I just settle for like the small debit. Let me do this instead. Defense bottom trade. I'm going to go SPX 311 buy the 6705, 6690. Pending order. If you want this trade at 10 cents debit, you still have the profit trap opportunity from 6705. I just got filled on 10 cents actually, so I guess I'll just put it in here. So 10-cent debit is filled. So I'm basically tossing away 10 cents. If it doesn't get filled today, it's an offer any defense. I lose $10 filled. So we have a profit trap. Just got filled on that 5 wide. Okay. So defense bottom trade. Oh shit. Now the market's going up. 68.07. So my $1 credit 5 wide got filled. Okay. So update for daily profit play. We have the bear call spreads in. We have a 5 wide iron condor in, and we got a defense trade to the bottom. I need to get some defense on the top side now because prices are moving a little bit. Look at my delta switching. So this is my 5 wide right here. And this is my, that's my 15 wide. And there's my 15 wide. So I'm going to play a little bit of defense. We're possibly going up directionally towards the 68.50 zone. I started selling at the 60, so we're not done yet, but we did breach. We're breaching that positive negative gamma right around 6,800. So I do want to keep a close eye on that for the morning. So that's 15 wide, 15 wide. Let's see. See if this will fill. All right, these prices are a little nuts. I'm going to play just a little bit more defense here on the top side. I'm going to see if I'm trying to get filled for a, this is a only 15 wide. I'm going to go wider. All right, nothing yet. So I've got daily profit play, a little bit of defense on the downside. Top side, I'm looking to see what if I need to put in any defense. I want to maybe have something that's very cheap. Okay, so let's keep an eye on our strikes. This one that filled for $1, that's the 30 by 40. $68, $50, and 55. So 50 and 55, 67 and 66.95. Okay, and then this is my bottom defense. All right, so in, bottom defense. Now I'm going to assess and see if I need some top defense. My threat is up here at 60. So anything like 65 or 70, I'm trying to make that pretty cost effective if I can get some defense in there. Let me see. I mean, really, it's like if we're here at 70, 60, 70, and 80, 15 wide, butterfly. So right now, this is what I'm dealing with. I've got credits of $1.95 and $1. So I've got $295 to work with on the day. Now, I don't mind sacrificing a little bit of this to make a, cheap enough defense trade, right? So right now, if I can get a $1,500 profit trap, maybe offering some offset. The price is awful. Look at this bid, mid, ask. It's all over the place. Maybe trying 50 cents. not filling for 50. I'll penny this up a little bit. 55 cents, not filling. 60 cents, not filling. Let's try 60 cents. We're right at that positive negative gamma pivot around 6,800. All right. Canceling defense for right now. What else can I sprinkle in here? If I buy, sell, that gives me 1,500 bucks. So I can overlap these strikes, but I can do a $1,500 profit trap. That's right in the guts of all my bear call spreads. So $1,500 and then go 20 wide. I mean, that to me is a better defense trade. It's going to cost me 40 bucks. And my day is I'm up 295. If I sacrifice 40 bucks, I still make 250 on the day. I'm still pretty happy with that. Let's see if I can get this trade filled for like 40 cents. I'll feel a lot better getting something like this filled. 40 not filled, 45. Even 50 bucks is okay. All right. Now I've got some defense in top and bottom for the day. So it's going to be an interesting day. Defense, top trade. I am overlapping with the 5 wide DPP. So just keep that in mind for managing strikes and trades. All right. So SPX 311 expiration. And again, daily profit play is freaking intense, man. If you want to trade 0 DTE, there's a lot of risk that can come with a 0 DT trade. If I'm trading a top and a bottom, usually it can be very mechanical. Like I expect to win today. But if I'm up to $300 in profit on the day, I don't mind sacrificing, maybe $50 in order to defend myself at these tops and bottoms. So if I walk away with 250 bucks on the day, I'm happy. If I wash away as much of the risk as I can, it's great because the market is clearly not doing what I'm expecting it to do, which is what the market makers would price in. And if it's not doing that, I want to make sure I have some defense to hopefully offset some of that risk. So defense here, this just got filled for 50 cents. So buy the 68.55, sell the 68.70, buy the 68.90, 50 cents debit. This is a broken wing butterfly, but I'm accepting the debit. The debit for a $15 profit trap to help play defense on my bear call spread combo. Okay, so I have defense above, defense below. If the markets stay inside of our expected range, guess what? Defense wasted, we still win the day, making about $2.50 a contract. That's a good day. Yep. So it sounds like Trump's trying to that's called jawboning, man. That is a president trying to be very vocal about how we're succeeding. I think the Trump put is extremely close. I don't think look, the man cannot single-handedly control the market. He obviously has influence. It has happened. We've seen it on many occasions, both positively and negatively. So this was Trump tariffs. This was Trump. The war is over. Liberation Day. I don't even think we need to talk about that, but you know what that was? That was Trump. We're going to tax the world, right? So, I mean, yeah, he can say a lot, but ultimately the market's going to still, take it and price it good or bad. And I don't know. I just think we're still in this like giant churn, trying to figure out where it's going to go from here. But day after day, what has been nice is we're seeing still a lot of market efficiency. So far, market's essentially going nowhere. That's fine. We'll keep an eye on things for the rest of the day. I'm going to go ahead and plot out a couple of things with my side, so I know that my 60. So where'd my five wide get filled? 50. So 68.50 is just a little bit below the expected move. So that is one of my 5 wide call spreads. And then I have the 6,700, which is one of my put spreads. So there is where I need to see price stay for the day. I need to see price stay between my green lines. If that is the case, I win on my bear call spread. I win on my daily profit play. And, I'm getting a little bit closer to the expected move here. I'm actually inside of that. But on the put side, I'm away from it. So hopefully that's a good thing for us on the day. He uses the market as a benchmark. I don't know if it's the Dow. I think it's probably more S&P 500, honestly. I think the S&P is, it's S&P is the broader market. Dow is 30 companies. S&P is 500 companies. I think the S&P is probably the bigger benchmark for, a Trump put. The Dow has seen a lot of drama just because of financials. We had the private equity stuff with Blue Owl and Tricolor, and there was an acronym, something with like oh fudge, it's something it's something in Europe. It was a big real estate company that just filed for bankruptcy or had some insolvency issues. But there's been like 4 or 5 like headline bankruptcies or delinquencies, and I don't remember if it was BlackRock or Blackstone. Did BlackRock pause redemptions in private equity? It was either BlackRock or Blackstone. Yep. So yeah, there it was. So there were like 9.3% redemptions. I just read this yesterday. There were 9.3% redemptions, and they went ahead and paused and capped it at 5%. So they essentially trimmed the redemptions in half. And again, BlackRock has, I don't know, 4, 5, $6 trillion under management, but I'm not sure what they're. So you got $26 billion in corporate lending. It's like that's really nothing. I'm not trying to say this is overblown, but $26 billion. Come on, man. We did a $1 trillion raise on the debt ceiling. We've probably spent hundreds of $1 billions on this war. So I don't know. I really don't think about. If it's like 500 billion, if it's $1 trillion, then okay, we're talking major. Like you'd have to have the entire credit market blow up. Like consumer credit at $1+ trillion. That's a problem. But $25 billion, I don't know. It's just not there yet. What do I look for? If you want to see the credit events, then you want to look at something like this. Go to, we would go. Is it HYG over LQD? Let me figure out the exact the exact symbol that I want. Let me find out here. So if L, it's the other way around. So if I go LQD, and HYG, if this is going up, this is not a good sign. Okay. So let me see if I can just add this in as a ticker for kind of a credit watch. So LQD, HYG watch list. And then I will go IEI, LQD. What's IEI? Treasury bonds. Okay. So let me go IEI over LQD. So this going up, a little bit of pressure. So I'll add this to the mix as well. So watch list, add. All right. So if we do a spot check here, like this is treasuries over high yield credit. And a treasuries are outperforming. That's not great. This one is going down. If you look at them individually, take a look at LQD individually. Okay, we've got a little bit of. I mean, there's not. This isn't just smoothed over. I mean, we've had some events in the past, but you take a look at all these notable events when the market has been dragged down with it. I mean, this was Liberation Day. We dropped percentage wise. I mean, it happened fast, and Liberation Day did happen fast. But I mean, we had like a 5% drop here in a couple of days. So I mean, this isn't nothing, but it's also down like less than 2%. So I'm not seeing this thing in free fall or anything like that. That's LQD, HYG. This one looks a little bit worse. If you just look at them individually. But I just have to ask, do you think that this private credit stuff is enough to make like Goldman Sachs, JP Morgan, some of the biggest banks in the world, Bank of America, Wells Fargo? I mean, it really depends on how much exposure they have. And just like we saw with the regional bank crisis in 2023, it was immediately backstopped with instant liquidity by the Fed. And I think that is the reality. Is like, yes, it is a concern, but I don't think this is enough to say this is how the market breaks. I don't. I mean, we have AI disruption potentially displacing, millions of jobs. We're seeing more and more major layoffs. We have a war. We have, probably the 1% of all-time valuations. And I honestly think this is what I truly believe. I think the market is that has a soft underbelly this year, but I think for us to truly have a top in the market, I think we're going to blow the freaking lid off before we have a top. Like this reflects a rally. If we were up to like 7,500, then I would say, yes, I want to get short. But once this hit all-time highs and was just kind of limping into the end of the year, we haven't gone anywhere past that little bump into like September, October, right? Yes, we hit highs in November. We gave it back. We hit highs in December. We're still in those same choppy 3-month, 4-month levels. We haven't gone higher. I think the crazy part is this market might still, even if it kind of backfills here, we get another thrust with some more momentum and it stays like this long in the tooth. And that's when it starts to give us the topping pattern. And then we have like the lost decade in the stock market type thing. But I don't think it's here yet. I don't. So I'm just, the signs aren't there to be bearish. I think it's too easy to, sell newsletters and get clicks and try to get people scared. It's not there in the price action yet. It's not there. And obviously I don't want to be missing it. I don't want to be naive and ignore it, but I don't see the signs. There's still too much like fiscal support. There's too much monetary support. There's too much sentiment support. I think that the markets are financialized. It's like we use this as a major scorecard, and I think there's still a lot of interest to drive these things higher. Okay. Mark says, what conditions cause you to do the double bear call spread? Well, because I was going into the market with a little bit more of the safer play. So to me, I think the safer play is I'm always more comfortable calling a top with the expected move than I am calling the bottom. Okay. And I say that like that might sound a little counterintuitive because people would say, like, well, Chris, the market's bullish most of the time. It is bullish most of the time, but the markets rarely blow out the top side. Right. So the expected move in any given day, the expected move should be the easy thing should be the markets don't blow out the top side. Because if the VIX is going down, like right now, the VIX is still kind of sticky around like 24, 25 today. But it is very, very difficult for the market to do this. To go up for the day is fine, but to go up like higher than expected is very, very rare. So when I saw the opening, for me, it's kind of reading the tape, right? When we had a closing bell right in here was closed yesterday, and I had this big gamma wall stacked up, and we have some open space down here, and we're in negative gamma. I mean, to me, it's like the safer trade is unless price is going to get above 68 and convincingly get above 68. That is a tall level for the market to get to today. So that's why my initial thought was if I just sell some call spreads up here, it's going to be a tougher chore for the market to get to those highs. So that's my safe play. And then once the market started off very indecisive, I sprinkled in, okay, now look at the mechanics. We're basically neutral from yesterday. Let's sprinkle in a bear call spread and a bull put spread and see if the market stays inside the expected move. So that way I can make some money on the difficulty of the market to go too high, and then obviously make some money on the market staying efficient. And if I can, double dip on those and make some money, then that's a good day. Okay, does that make sense? All right. So that's why I started the day that way. It was kind of improvised, but I mean, I just looked at it from if I'm getting gamma readings here, we're in negative gamma. I thought it'd be harder for the market to get up to these highs. And then once we had the expected move print, that's and again, my bear call spread is where most of my risk is at today, but the risk doesn't kick in until 68.65. So if we stay below my measured expected move right here, below 68.65, we should be fine. If you look at the current market, by the way, current expected move is only showing 38 points. If we go 38 points from here, will we be safe on my trades? If we go 38 points up, we're going to be around, just round up to 40. Let's round to 40 points. We're going to be at 68.30. I didn't draw that very well, but you get it. 68.30. So if we go up accurately based on this current expected move right now, then we're up to 68.30. Does that threaten my call side? No. If we go down 38 to 40 points, we're going down to about 67.50. Does that threaten my 6,700 level? Not even close. So if this plays out today, we will be fine. And we should make money. Okay? All right. So that's the day. And net, $1.95 plus $1. And I sacrifice 60 cents because of those defense trades so I can make, my goal is if I can pull $200 today, I'll pull $200 today. 225, 235 is great. But if I've got most of this profit wrapped up before the close, then I'll take, $200 and walk away happy. Okay. Pete, what's going on with the oil stuff? I saw like the $300 million Texas deal. It's like partners. I think we're calling it Reliance as partners with India. It's some Texas deal. Is anything is it just driving prices lower? I mean, price hasn't really moved a lot. I did put in that pending futures trade. Hasn't been filled yet. I put in a broken wing butterfly down here at 75. Hasn't been filled yet. Let me see if that's still pending. Working order. Yep. So it's trading for a small debit. I've got a pending order at 10 cents, which means I'd be looking to risk 400 to make 100. But I also have $1,100 total profit if it gets into this trap between 75 and 74, which would be fresh lows from this bottom around 76. So again, I think this is out to this week. Yeah, this is out to Friday. This might not work, but anyway, we'll see what happens. $400 million released from the global. Okay, well, we haven't even repaired it. We haven't even added to it. That's the problem is we don't have. Let me see if I can get a line graph of U.S. strategic petroleum reserve. So this is Feb of 2026. Here you go. See if this is updated. 1 year, 3 months, 5 years. Yeah, I mean we've barely replenished this. I mean, I know in the Biden administration we just depleted like I don't even know what percentage of it, but I mean that was like the all in just fiscal policy to the max. Dump all of our oil reserves and try to make it look like the economy is just booming along when it really just created a K-shaped economy. So it's a bit of a mess, but this has to be replenished at some point. I mean, so dumping more 400 million barrels, it's like, okay. Are we taking this to zero? I don't know. Is there? Yes, there is, Ellen. I did the defense trade. It's in there. It's the defense bottom trade in your alerts. Check your Telegram. There's a defense bottom trade listed. I posted it at 10:01. That was a 10-cent debit. Okay. In fact, now that the market has given us a little bit more of a note. I mean, we're breaking some fresh lows intraday. Again, this may not do anything, but now if I put another defense trade in, I might look at a credit side See if I can get a credit spread in here. Let me go back to SPX. This one, if it doesn't fill, it doesn't cost me anything. But this is defense. So I've got the put spread down here. Now, if I want to overlap, let me see. So I bought the 6705, sold. So that's my 10-cent defense right here. Okay. If I wanted a bit more defense, maybe let's find a level here. I mean, do I think that we're falling all the way down to like 6660 today? Not really. Not really. But I don't know. I mean, we might as well get a defense in that maybe is cheap. So I don't want to overlap. Let's go 85 by 75 by 60. Okay. Like if this fills for a credit, right now showing 10 cents credit, if you can take it for credit, it's a free hedge. Yes, there's risk if price falls below 6660. I mean, could it fall below 6660? Yeah, maybe. What's that dump on the day? If we fall to 6660, we'd have to fall 1.7% today. Is it possible? Sure. Anything's possible. So maybe the smarter defense is getting something way down here between like the 60 and 40 zone. Let's see. 50, 80. This better be cheaper. I'm not going to take it, but let's see what happens. It's still 80 cents. I don't love that as much. Let's go 75, 50. That's 25, and then go down here. So this is another kind of broke wing structure that would give me up to a $2,500 profit trap. I'm not going to throw 50 cents at it, but I would throw like 10 cents at it. I'm going to put this in for like a 10-cent credit. Let's go 25 cents credit. 25 cents credit in order, and it's up to a $2,500 profit trap. I'll see if it may not take. We'd have to have price falling pretty dramatically for that to happen. But that puts my break even at 66.25. That'd be breaking the lows of 66.36, which I don't think are going to happen. So I'll put it in here for maybe a credit. We'll see what happens. Okay, VIX for right now. Maybe heading up a little bit. Let's see if we break these intraday highs. That's a 26.3 VIX, 28 VIX. We've had plenty of intraday examples this year already where the VIX has gone up, 5 points in a day. Like that's a challenging VIX to trade. But right now, bear call spreads 195 is up 122. I'm already up 62% of that max profit. If price continues to fall, I'm going to eliminate as much risk as I can out of the day, which is taking basically as much profit out of this 195 that I can. Now the rest is all about, defense around that 6,700 handle and maybe sprinkling in something cheaper and wider for a bigger profit trap if we have just a crazy fall off day, which I don't think will happen. I mean, you have to remember, like, you can't go into trading intraday and trading zero DT with the expectation the market's going to just have these ripper moves. It's rarely the case. So just to have that reinforcement, it's like we shouldn't be trading on the fear of like this market's going to move so much today. It's like it barely does. Most of the movement is after hours. Okay. Most of the intraday stuff is contained and liquid and stable. That is the power of zero DTE. Okay. Moses, what's up, man? How are you? I just see you on YouTube here. Caught the segment this morning. Good. Very good. Thoughts on energy stocks, Bloom Energy? I mean, I don't know. Don't chase this stuff. Look, XLE is still ripping, right? I'm still holding on to XLE. I've got a bunch of puts in. Here's XLE. Again, it's hard for me to be an individual stock picker. I've got to really, really like something to be an individual stock picker. I'm generally not. This is why I trade the indexes a lot. You get better tax breaks and you get the haystack to play. It's less volatility. So, I mean, I'm up 12 grand on energy right now. That's just XLE, but here's some of my XLE, XLG. That's a ratio. Let's see here. Top 50 ETF. Oh yeah, I got filled. I tried to get filled on all my accounts here, but I couldn't. Anyway, that's almost full profit. I might as well take this one off. Let me take this one off. So I got $1.20. It's up 114 bucks. The problem is I don't know if I can get filled for profit. Let me see if I can get out of this one. Ha! So I took the trade for $1.20 credit. It shows that I'm up $114. This should be trading for like a 6-cent debit. And I go to close it and it says 63 cents. So I'm going to try to close it for 6 cents, maybe 10 cents. Didn't take. Essentially, that's just an illiquid instrument. Anyway, XLE up about 12 grand. XLU up about 3. It's $2,600. XOM up 1,600 bucks. XOP up 1,300 bucks. I mean, that's kind of my energy stuff. I'm still long natural gas, but I'm down. I need natural gas to make a spike up to 20 again. Uranium, I have a couple of shares there. Nothing crazy. USO, sold some puts on USO, up 1,700 bucks. Let me see ratio spread. 55 by 50. Collected 360, it's up 130 bucks. Okay, I mean, price would have to fall back down to $45 a barrel for me to be basically losing on that trade. Again, I don't think that's going to be a losing trade. There's a 88% chance of profit on the trade as we are right now with high volatility. So to your question on energy stocks, Bloom Energy, Power Solutions, PSIX. I mean, are you picking anything inside the XLE sector? So if you go Bloom Energy is BE. I mean, this honestly looks a lot like Chevron and ExxonMobil, which is just a big range. So maybe a good play if you want to. Here's what I would look at. One thing that could be an interesting play is maybe for the next 30 to 45 days is maybe doing a fancy little strategy called a Jade Lizard, which is I sell a put down here. I do a bear call spread up here and see if this stays within the expected move and try to grab some premium. Richard, yep, I'll put that one in. So defense, bottom trade, pending order. This one hasn't filled yet. Again, if I filled it for like under 10 cents or 15 cents, I might still take the trade. Let me go back to the SPX. So I put in for a 25-cent credit, 311. Okay, so it's in, pending, not filled. All right. So Bloom Energy. Look at the lows. Again, I want to see what the IV rank is, see what the premium is. I mean, let's take a look fundamentally here. Let's go. So it was BlackRock on the private equity stuff. Let's go simply Wall Street, Bloom Energy. BE. Crazy. Well, that's not the best snowflake, but healthy financially, future growth, insider selling, shareholders diluted, volatile share price, as we know. Price to sales 21 times. That's crazy frothy. Cash flow, discounted cash flow model 136 fair value. Not saying that we can't go up, but I wouldn't be chasing this thing. I mean, if anything, to me, it's like 30 to 45 days to see if this has any gamma readings. Let's go to let's look at X. Let's go to BE. See if it's on here. I mean, it's all positive gamma. Let me go out. Let's see, 16, 20, 37 DTE. Let's look at like the April monthly expiration. I mean, there's little to nothing on the downside. It's like this is all just maybe hanging out at 170. I don't know. Yeah, I mean, a Jade Lizard might be decent. Is there any skew on this? See if there's skew. See if it will give me. It might not give me the symbol for the skew that I'm looking for. I'll just go back to SPX. Anyway, let's take a look at it. So that's still SPX intraday. BE for Bloom Energy. As long as I'm looking at something where price is selling some premium around the 130 handle. Like I said, Jade Lizard is you sell a put, do a bear call spread. You just want to make sure that you're still going to make net profit if you lose on the entire width of the bear call spread. So example would be if I sold a 130 put and I do like a 180, let's see what the strikes are for the bear call spread. Let's have a look. So if I went out earnings April 29th, well, I can't. I mean, I could go to the 15th. I'll go to the 24th though. Get a little earnings kind of push up before. If I sell the 130 put, I mean that's pretty juicy, honestly. And I sell the bear call. I could do that like a 180, 185-ish. So 185 by 87.50. I mean, this isn't a terrible trade. I could get $1,000 on this trade. If price stays above 130, stays below 185, I mean, then that's a good trade. Now, inside the expected move, we're seeing a plus minus 43. I mean, realistically, I should just move this out further, right? But the difference here is look at the difference in strikes. If I move this to like the 210 to 215, now my risk is $5 on the bear call spread. So if we go way, way up, I'm risking up to $5 on the bear call spread. I still get enough to cover the trade. But if I'm blown out to the upside, I mean, I don't how much premium am I actually making here? If I go 180 to 185, I mean, I'm getting a little bit more premium there, but not much. So, I mean, is this trade even worth it? Yeah, it's not nothing. I mean, just the put at 130 is worth $800. If I do a bear call spread, I get $10. That's I mean, delta wise, it still seems pretty high, man. A call delta at 29 seems pretty high for an expected move. I don't know. I kind of like this trade better. 130 by 120 or 115 or even 110 and see if I can get a ratio spread. How's that? I get a $1,500 profit trap. Do this on a margin account, go out 44 days. If price is above 130, I make $177. If it's inside this zone between 135 and 115, that's bonus trap material. It gives me up to $1,500 extra. There's about an 88% chance profit on the trade. That's before earnings, by the way. On your trade yesterday from XSP showing $1, I would leave that, Randy, because if we have a run back up into the VIX in 25 or 26, we'll probably still get filled for $1.15. I would just leave it pending. I wouldn't settle for $1. I mean, $1's okay. You're risking 4 to make 1. It's okay. Yeah, it's okay. I mean, get filled for $1. It's a very similar to what we do every single day in daily profit play. All right. I like this trade. Let me see what this is. $1.20, 177. So I get a $1,500 profit trap, expect to move at 120. Could we fall to 120? Of course we could. But question is will we? I mean, if we fell to 120, I take assignment, I repair it. The premiums are frothy enough. Going at the money, you're getting like, even close to $20 to $25 for a covered call. I think this could be repairable. I'm going to take this trade. Let's see if we get like two. I don't know. Let's try $3. I'll try to get a little juicy premium here. So not getting filled on the excess premium. So I'll work this down. 295. Mid price showing 276. So if I get filled, 255 or better, that's good. 275 would be great, obviously. 290. Just going to try to get a little excess premium if I can. 285. 280. 270. Come on, baby. I hate it when I don't get filled at the mid price or lower. I hate going lower than the mid price. Now I'm going to penny it down. Hopefully 255 or better. 265. You freaking turds. 60. I will not take this trade for less than 250. All right, got filled at 255. Okay, Project Options Edge, you guys get a new trade today. Bloom Energy, 135 by 120, 255 credit, out 44 days. There's about a 90% chance of profit, 85% chance of profit. I'll take that. And if I get assigned at it, I'm going to repair it. I'll do like a 7 to 14 day covered call, try to repair it. Maybe grab anywhere between $250 to $500. So if you get assigned, it's going to take some capital to repair it, but it should be pretty straightforward for, maybe a quick repair. All right, let me get this into my margin accounts. $255 is getting filled. I'm getting filled. $266. Well, heck. What the heck? That's way better. $265. Give me a better fill, you thieves. $263, $260. It's like I just ran through these numbers and it didn't get filled. Oh, fudge it. Just put it at $255, I guess. I wonder if that was a typo. 255 is filling. 266, it says it got filled, but that seems pretty generous since I can't actually get it filled there manually. All right, next. All right, 260 got filled on that one. Okay, it got filled there. Come on. All right, it's taking away my juicy premium here. 52. All right, give me 250. $249. All right. What was that movie where it's like a newspaper boy that was chasing around somebody the entire movie, saying like, "Give me my $3, give me my $3 or $2 or whatever it was." Some like 80s comedy. Okay. I have XLE. Yeah, nice. All right, so let me get this out for Project Options Edge with John Cusack. Let me see what that is. Give me my $2. I want my $2. Better Off Dead. There it is. The entire movie. Funny. Okay, Project Options Edge. New trade coming at you. All right, it's trade number 122. BE, Bloom Energy. We're going out to April 24th. So 249 to 260 credit. Filled on multiple accounts. This is a ratio spread on BE with a $15 profit trap near expiration. If assigned, break-even price. This is what's nice is the break-even price would be 120 minus 15 minus the $2.50 credit we pulled in. I'd own Bloom Energy at 102.50. That's why I'm not really worried about a repair in this thing, because if we're down with a break-even at 102, I mean, the stock just dropped 37% in the next 44 days, which not saying it can't happen, but it's probably not going to happen. But 102.50, I'd repair that for a very quick, a couple $100. Okay, trade is in. Project Options Edge coming your way. Sorry if you guys can hear my dog snoring. Just him speaking into the microphone. Okay. Project Options Edge. Where is my tracker? All right, new trade. Trade number 122. Wait a minute. $120. What the hell happened to my trades? Did I not add those? SPY 120, 119. What the heck? Weird. So my tracker stops at 118. Am I missing some trades? Like, what the F? Shoot. Sorry. That's strange. I'm trying to figure out why my... Anyway, I'll get them added to the tracker. I don't know why it was not taking those. So GLW, trade number 117. What the fuck? KHC. So 115. 115 is DIA. 114. I got the numbers wrong. 114. All right, sorry. My spreadsheet in Project Options Edge is a little off. I need to repair that a little bit. So let me get the session done. I'll fix that spreadsheet. Looks like trades. So 113 is a Dow trade. 112 is the Qs, 114 is the Dow, 115. So 113, 114, 455. Yeah, these numbers are fudged. So all right, I'll fix it. Sorry. Anyway, there's a new trade. I don't know what the trade number is now, but it's Bloom Energy. It's in Tracker. So note my trade numbers are slightly off. I'll fix in Tracker and here in Telegram with edits. All right. $1.40. I mean, that's definitely not the trade that I want. I would not take that for $1.40, Rick. I mean, try to get that thing for $2.50, man. Try for that $2.50. Yeah, especially on the credit side, you want to take as much of that credit as you can. Ed says, when you're done, can you give me the link to the YouTube? Yeah, Ed, you can just always go to youtube.com/Chris Pulver. And today's session will be posted and archived there. Healthcare, another one that I don't want to chase. The insurance side of things, maybe a little iffy. Healthcare is XLV. Let's go to the daily time frame. I mean, I've been long XLV since last year. I thought this is going to be one of the potential sectors that performs well. So right now I just have XLV, J&J, Pfizer. I'm long Pfizer shares. That's kind of my healthcare space. I know Pfizer's more pharma. But this is September 125 by 120. Wasn't a huge credit, but I did a few contracts there. Individual healthcare stocks, I think they kind of had their run. UNH has been beat up, but that's insurance. That's not really healthcare. That's insurance. So I made a lot of money on UNH last year in this kind of double bottom. So that move paid pretty well. I don't know if this is like the safest trade to say this is the bottom. I mean, I think fundamentally it's a great company, but we need to get out of this state of like, everything from pharma prices to insurance costs. Like all this is up in the air with President Trump. So I don't know. I just don't want to catch a falling knife. It's tempting. I mean, I've got a trade right now with Humana. This one's exposed a little bit. We're trading down to 172. This to me is kind of like the new United Health Group. So hopefully, this is a giant gap here. I'm looking to see if this will find a way back up and to fill that gap because I've got a ratio spread with a 190 strike. So I'd like to see it above 190 and offer me some ratio spread profit. Yeah, I saw that too, Dan. Mine is so my I don't know. It looks like it's like hiding some of the lines, but either way, I'm just going to add below. I'll just add more. So 119, 120, 121. I'll get the numbers figured out. It looks like I just kind of, I think KHC and the Dow, I've got like, 113, 114, and 116 on the tracker are all Dow trades, the DIA, and then KHC sprinkled in there. I have GLW that I didn't add for some reason. So I must have just missed that, but I'll get them updated. But we should have 121, 122 trades so far in Project Options Edge. All right. So Moses, answer your question on healthcare. I mean, I don't know. I mean, fundamentally look good. I would be trying to stay out of the way. Here's Humana. So HUM. I mean, snowflake wise looks great, right? When you're talking about changing pharma plans, changing insurance plans, I mean, it's just killing these stocks right now. I mean, Humana from $600 almost is down 70%, man. 70%. UNH, CEO gets murdered and the market's it's down 62%. Like that is awful. And you look at the fundamentals, it's like HUM is solid. Look at the discounted cash flow model. I mean, it's only 17.5 earnings. and discounted cash flow shows $1,000 stock. It's like, big picture, it should be a great stock. But I wouldn't guess at the bottoms right now outside of like, yeah, I'll dollar cost average and hold it. I think that'd be fine, especially if these companies are going to include some type of, automation, some type of AI component where they can lay off workers. And I know that sucks, but corporate America loves it. So again, they're monster discounts. I just don't want to see the damage continue. It's like if we go to, okay, this is pretty much like COVID lows. I mean, does it get there and bounce? I mean, if it works its way back, it's like that's a great trade for a dollar cost average position, right? If I threw like $1,000 to $10,000 at it and it goes up 2x, I'd like that trade. I mean, there's a 300% gain on your position. Well, I guess no, it'd be 200%. If I bought it at 200 and it goes to 600, okay, there's a double and there's a triple. That's not a bad trade, right? But do I want to put a bunch of exposure on this? Like, not yet. I probably just put a dollar amount to it, so it's like, yeah, I think it's a good trade for the bigger picture. So dollar cost averaging wouldn't be terrible. But I've traded some options to kind of get out of the way, and hopefully they work out okay. But there's clearly something going on in this space that's affecting these companies in a big way. Yep. So if it drops further, that's why I'm trying to avoid like the options exposure and just think of it like this is an attractive level. We're back to COVID lows. I'll take some stabs at it here. I mean, what a flop if this thing goes from 6 and change down to below $200 for really like a cash cow company. I mean, unless Trump has like Trump insurance up his sleeve to replace these. I mean, these companies make so much money, it's insane. And I'm sure they'll fight you tooth and nail to pay you. If you had an insurance claim, I'm sure they'll pay you, or they'll fight you before they pay you. I mean, people having homes lost in natural disasters and not getting paid, not getting things insured. That's what was happening with all the shipping containers going through the Strait of Hormuz. Is insurance companies were dropping insurance because of the risk. Wildfires in California, not even get your house insured. Floods in the East Coast, not get your house insured. It's ridiculous, man. It's so unfair. So I don't know. There's like a stigma with these right now that I'm just thinking dollar cost average versus aggressive trading. Okay. All right. What else we got going on here? I think, oh shit, I think I've got to go. Yep, I've got to go. I've got a webinar at 11 o'clock, which is in 2 minutes. I'm glad I paid attention. All right, here's the deal. So I'll wrap things up. Sorry, I've got to do an abrupt cutoff here. But for the rest of the day, this is where prices are at. We might make a run to 68. It should be a chore to get up to 68.50 today. Anything is possible. That is still a lot of direction. Okay. But these are my levels. So hopefully we'll see prices, below 68.50 and above 6,700. And it's going to be a win the day for daily profit play. Okay. But I'm going to jump into an 11 o'clock webinar and come back and see me probably later today. I'll probably wrap up into the close. If I take profit on some of my trades today, then I might just post that in Telegram for updates. I'll get my Project Options Edge trade tracker fixed. But I might do a brief closing bell stuff this afternoon. So look for that. If you want to go live with me on YouTube, then check it out. So, all right, I'll let you go. Thanks for being with me this morning. And we'll see you soon. Come back and join me this afternoon.